Welcome, valued viewers, to our channel, where we delve into the intricate matters in a light, easy-to-grasp way. Today, we're peeling back the layers on a topic of global concern, the coming economic collapse of 2024. We'll explore how decades of debt accumulation by the world's major economies, coupled with reckless spending and rampant inflation, are steering us towards a potential economic crisis. This journey may be a little bumpy, but it's essential, so buckle up as we embark on this journey to understand the impending economic collapse. To kickstart this exploration, we need to understand what debt is. Think of debt as a promise. Imagine you're at a coffee shop and you realize you've forgotten your wallet. Your friend who's with you offers to pay for your coffee and you promise to pay them back later. In this scenario, you've just created debt. You owe your friend the cost of that coffee. Now, let's scale this up. Let's say a country wants to build a new highway, but it doesn't have enough money in its treasury to cover the costs. So, what does it do? It borrows the money, often from other countries or from its own citizens, in the form of bonds. Just like you owing your friend for coffee, the country now has a debt. It promises to pay back what it borrowed, plus a little extra called interest. But here's where it can get tricky. Unlike your coffee debt, which is relatively small and easy to repay, countries often find themselves borrowing massive amounts of money, and the more they borrow, the more interest they accrue, and the larger the debt becomes. This is what we call a debt cycle. And it's not just an issue for developing countries. Even the world's largest economies find themselves in this cycle, borrowing money to fund public services, infrastructure projects, and in some cases, wars. The problem arises when the debt grows so large that the country struggles to pay it back. This is similar to if you kept borrowing money for coffee every day but never paid your friend back. Eventually you'd owe so much that you couldn't afford to pay it back, and your friend might stop lending you money altogether. On a national scale, this can lead to economic instability, inflation, and in the worst cases, economic collapse. But it's not all doom and gloom. Understanding debt and how it works is the first step in addressing the problem. Now that we have a basic understanding of debt, we can delve deeper into the issue at hand. Scene script. Over the past decades, the world's major economies have been piling up debt like there's no tomorrow. This debt accumulation hasn't happened overnight. It's a process that's been ongoing for years, and the reasons behind it are as complex as they are varied. Let's peel back the layers and delve into some of these causes. Many countries have experienced economic growth, but this growth has often been fueled by debt. Governments borrow money to invest in infrastructure, education, and healthcare, believing that these investments will pay off in the long run. However, if the economy doesn't grow as expected, the debt can become a burden. Then there are wars and conflicts. These events often cause countries to borrow heavily to finance their military efforts, leading to a significant increase in national debt. The cost of war is not just the loss of life, it's also the crushing debt that can cripple economies for generations. Another significant driver of debt accumulation is the financial crises that have rocked our world over the past decades. Think back to the global financial crisis of 2008. Governments worldwide had to pump trillions of dollars into their economies to prevent a complete meltdown. This money had to come from somewhere, and often it came from borrowing. So, what are the implications of all this debt? Well, it's not pretty. High levels of debt can lead to a decrease in economic growth, an increase in inflation, and potentially an economic collapse. When a country's debt reaches unsustainable levels, it can trigger a debt crisis. This can lead to a vicious cycle of borrowing more to pay off existing debt, ultimately leading to economic instability. This is not just about numbers on a spreadsheet, this is about real people, real jobs, and real lives. The burden of this debt falls on the shoulders of the average citizen, who ends up paying the price through higher taxes and reduced public services. This mounting debt, ladies and gentlemen, is a ticking time bomb waiting to explode. This brings us to the main subject of our discussion today, the potential economic collapse of 2024. The world's major economies are teetering on a perilous precipice, and the warning signs are all around us. For decades, these economies have been accumulating debt like a snowball rolling down a hill, growing larger and faster with each passing year. Now it seems the reckoning time is nigh. This relentless build-up of debt, coupled with a lack of financial discipline, has put the world's economies in a precarious position, akin to a house of cards that's ready to topple at the slightest breeze. But let's not forget another significant factor: Rampant inflation. Picture this. You're at a supermarket and every time you visit, the prices of basic commodities seem to have skyrocketed. This is inflation in action, eroding the value of your hard-earned money and making life increasingly difficult for the common person. This combination of poor economic conditions and unchecked inflation is akin to a double-edged sword, cutting into the very fabric of our societies. It's creating a widening gap between the rich and the poor, and causing widespread uncertainty and anxiety. The economic conditions we're witnessing today are not just numbers on a spreadsheet. They represent real people, real lives, and real struggles. Are we standing on the brink of an economic abyss? Only time will tell. As we wrap up today's discussion, it's clear that the economic future looks grim. We've journeyed through the labyrinth of global debt, understanding how this behemoth has grown over the decades, casting a long shadow over our economic stability. It's a sobering realization that the choices made by nations today could lead to a potential economic collapse in the year 2024. What we've discussed today is not to induce fear, but to emphasize the importance of understanding these economic realities. These issues affect us all, from the price tag on our daily bread to the larger financial decisions we make. Knowledge, they say, is power, and understanding these economic trends empowers us to make informed decisions and navigate these challenging times. In this ever-changing world, staying updated is crucial. Please remember to like this video, subscribe to our channel, and hit that bell icon to stay updated with more such informative content. Thank you for tuning in.